Alright guys, in this video I'm going to be going over one of the most basic trading strategies I use every single day to trade options on the indexes, as in SPY, QQQ, and IWM. Let's get right to it. Okay, to start everything off, we're going to need trading view, the 8 EMA, the 20 EMA, and the 10-minute time frame. So now over here on our trading view, we're going to pull up the LED indicator where we'll have our 8 EMA, our 20 EMA on, and all of our pre-market high, pre-market low, prior day high, and prior day low levels. So first off, the most important thing with this strategy is our 8 and the 20 EMA. What we watch for these is when the 8 and the 20 EMA cross over right here. When these two cross with price going towards the downside, we're looking for downwards momentum to continue. And when we're crossing these to the upside, like right here, we're looking for upward momentum. And then we use the pre-market high, pre-market low, prior day high, prior day low to be our profit targets or support and resistance zones. So we're hopping into this day on SPY right here. As you see, we had our EMAs cross on this big gap up, and they're still above each other and respecting it. So we're going to be looking for upside continuation. Right here, we wait for a 10-minute candle close above the 8 EMA. We wait for the next candle, or when price decides to come back into the zone, to tap into the 8 EMA. As in here, the price fell down, so there's no entry until price reclaims this zone. We enter it once it reclaims it, playing for the upside, targeting our pre-market high, which is our next resistance level. Then, right over here, the price on the 10-minute time frame closes under the 10-minute 8 EMA. What we watch for is the retest of the EMA, which we get in this candle. So we would have entered in puts right over here. The rest of this day was pretty choppy, as the biggest moves are within the first 1 to 2 hours of market open. So let's go find some more examples. On this given day, the 20 and the 8 EMA crossed pre-market towards the downside, so we're looking for downside continuation. As you see, we don't have any retests over here, so we're still waiting. A lot of invalid stuff, just choppiness right here. Then we do make a move down and hold under. This price comes here, back up to the 8 EMA, taps into it. We enter on that bounce, targeting the downside, which in this case would be our prior day low level, which is this purple line right here. Then we can go back over here. 10-minute candle closes above the 8 EMA, retest it. We entered in calls, targeting for the upside. We didn't tap into our target, probably would have got break even on this trade. Let's go to another day. Market opens, the 8 and the 20 crossed towards the upside pre-market, so we're looking for upward trend continuation. We got the 10-minute candle close over the 8 EMA. We wait for the retest, which we got right here, enter on the retest with our stop loss just below that, and we target to the upside. As you see, this was a beautiful trend day, and price respected the 8 EMA the entire way. So now let's get on to the stop loss. We know how to find our entries, but let's get on to the stop loss part. So whenever we enter on one of these bounces, our stop loss is always a max of 20%, or when price does not respect the 8 EMA. So for example here, if we were entering calls this whole position, we would have exited once a candle closed under the 8 EMA with a body like this, showing weakness. So that is basically everything for the strategy. You just got to watch for when the 8 and 20 EMA cross in pre-market to see which way it's going. Then you got to wait for that confirmation with a 10-minute candle close above the 8 EMA and enter on the retest to that zone. So I hope you guys found this video useful. If you guys want to learn more about it, you can check out my other YouTube videos, or you can click the link in my bio to join our Discord and trade live with me every single day.